Hello ladies and gentlemen, welcome to my channel. If it is your first time to come, welcome. We talk about all things finance and how we can be able to help each other grow financially. I am here to educate and to elevate you into greater levels financially. So today we're going to speak about short-term consumer loans or the payday loans, and why so many people are trapped into these debts. So ladies and gentlemen, it is important to note that the reason why these payday loans have continuously increased in popularity is because more and more people, especially the low income people in the low income levels, are not able to access good credit facilities from the banks, either on time based on their need or because of their bad credit. So it is important to note that is why they are growing. They are filling a market that is not filled by the traditional lenders. Again, it is also important to note that there are people who have found a space to be able to invest the additional funds and be able to increase their rate of return. Again, it is important to note that the people who invest in these payday loans and these lenders make the highest possible profit. Ladies and gentlemen, these things are profitable to the investors, extremely profitable. Some make as much as 75% per annum, and some have been hard to even make up to 100% per annum on investment. Why? Because people are charged exorbitant fees. So one of the reasons why our people are so trapped into these credit card debts is because they promise a quick turnaround. So they give you readily accessible funds with less bureaucratic tendency as the ones that we see with the banks, and they are able to give you these funds within a short period of time, and they do not take too much time to evaluate the lenders that they give. They are also available even in odd times and in odd days when the normal banks are closed. So they are readily available and they are readily accessible to the people who need them. But now the challenge is, and that is what makes people get trapped in this kind of companies, is because, one, the kind of loans that they give are short-term loans, consumer loans. Those are the loans that you take to be able to feed your family, to be able to pay rent, to be able to do this and that. Now the challenge is in that these kind of expenses are incurred and recur each and every month. So if you take a loan to pay for your rent this month, you will still need to pay for your rent next month. So you find that you are constantly in need. Now the challenge comes in that some of these loans are high interest loans. They charge as high as 7% per month. Ladies and gentlemen, this is high interest loans. These 7% translate around 84% per annum. Now the thing that they do not tell you is that even if you pay the minimum amount that they ask for, so you go for a refinancing, they change the terms based as if it's a new loan. So one, you incur a penalty for non-payment on the agreed time, and then your rate of interest goes up. So at the end of the day, because it is a consumer loan and because you need to continue bridging and paying your expenses, you find that you kind of find yourself refinancing your loan every month. So you turn over your loan continuously. So if you began with an interest rate of 7% the first month and you're unable to pay completely, so you take an additional loan to pay off the previous loan and take on a new loan, you find that the next loan you pay with, say, 8%. Again, with the penalty of not paying on time. And then you find the following month, you incur 9%. So it continues adding and adding and adding and becomes sustainable at some point. Ladies and gentlemen, that is how you are trapped by these short-term loans. Again, they tell you, no, you can choose to have a longer period of time and pay a minimum amount. But now the challenge is, and what they do not tell you is, that this kind of schemes do not allow you to pay down your capital. So you are paying but you're not getting any better. You are paying debt, but you're not improving. You are constantly having to pay more and more. So you end up accumulating more debt and more debt and more debt. Again, sometimes they ask you for securities. So they ask you, give us your car. So your car is valued at $5,000. Give us your car. Give us the title of your car. Your car is valued at $5,000. They will not give you a loan of $5,000. They will give you a loan of $2,000. Because they know that when you struggle and your debt continues to grow and grow, it will come to that $5,000. And when they come to recover the car, they will be able to recover the capital they gave you and the interest that it has incurred up to that point. Ladies and gentlemen, it is one of the quickest way to poverty, these payday loans. They do not tell you, but it is the quickest way to poverty. It is the most lucrative way for investors to make funds. They make so much money. In fact, it is one of the most profitable. It is only borderline to illegality because in many states it's not illegal to lend. But it is highly immoral, and it is giving these investors so much money, but at the cost of the poorest people in society. So a study was done a while back on these payday loans, and it was found that the towns that had the highest number of payday loan lenders had the highest poverty rates. So ladies and gentlemen, this is not finance. This is a ticket to poverty. And the easiest way to be able to get out of short-term loans or short-term consumer loans is to be able to get another loan that you can be able to get from a traditional lender or a bank. Or pay or sell a car or sell something and pay completely the debt and do not take any additional debt. Again, as the people who work in a company, you can be able to talk to your employer. Talk to your employer as a number of you or as an union, and ask your employer for advance on your salaries. So you can ask for advance payments on your salaries, so that by the time you are paid your salaries, you are able to offset against the advances that you have been advanced for that month. So that is the easiest way. Again, if you are an employer, the easiest way to be able to get your people out of this debt is to advance monies. You can, and you are able to. You can charge a small interest or none at all, because your desire is to benefit the people who are working under you. Again, for the borrowers, easiest way to get out of this debt is not to take it in the first sense. If you are completely unable to overcome the temptation to borrow, then borrow from other means. Borrow from your friends or your family. Borrow from your traditional lenders. Avoid going to these payday lenders. Avoid, especially if it is consumer. You're not meeting an emergency thing that you have to pay for now. An emergency someone is in the hospital and you need to pay a bill or procedure or something like that. If it is not a must for you to have, if it's just consumption, you need to buy a new phone, or you need to pay for food, avoid. You had rather adjust your expenses and reduce your spending, because payday loans are the easiest way to poverty. So ladies and gentlemen, I hope this has helped you to be able to understand how they operate and how you can be easily trapped in these payday loans. If you have not subscribed to this channel, kindly subscribe to the channel, leave a comment, get to let me know how I can be able to help you and how you can be able to talk on all things finance. So thank you and enjoy.